Yeah, I think what it tells us is another reminder that fear is a greater motivator than greed. And over the last,
Are people fearful now?
I think people have been fearful for the last few months. Absolutely. I mean, we see it in the uptick in, as you mentioned earlier, the low volatility products. The leading low volatility products have all been taking in inflows and have been up nicely, including our own LSLT. But one thing that you do notice is people don't want to get away from equities either. So they want to be exposed to equities. They just don't want the volatility.
Well, you're looking at a dividend yield on the S&P 500, which is the benchmark 10-year bond yield. There was a story this weekend that, and I can't remember whose it is, so my apologies to whoever wrote this story, that high-risk municipal bonds are getting bought simply because people don't appear to know what else to do with their money to get any kind of a decent return.
Sure. Yeah, I think the number was around $8 billion poured into these high-risk munis so far this year, which is something we haven't seen in a couple of decades. What that points to in our view is just in terms of flight of safety, but I still don't want to miss out on equity returns. S&P is still up 13% for the year. So, at the halfway point almost, it's a great return. I'd like it to continue. I don't want to be out of the game.
The hardest thing to do when you gamble, and I'm not saying that the stock market is gambling, but if you're winning at blackjack, is to take your money and leave the table. Most people stay and lose the money. That's why casinos look so nice, right? Do we take our money out of the stock market? We made 13% this year. There's a lot of worrying signs. Do we want to trim and just take some of that profit, if we have any, of course, and wait till things cool off?
Yeah. What we're telling advisors and what we're helping them with is just rebalance. If you take a look at other areas around the globe, whether it's Europe, Asia, or even emerging markets, the U.S. is still the most attractive. You still have growth prospects. I mean, despite what the Atlanta Fed is saying about growth for the second quarter, 1.3 versus 3.2, it's still a healthy number. I know there's a slowdown, but again, it's all relative, right? Where else would you put your money? Where else do you see the best prospects? More importantly, if you look at volatility for the last few weeks, it really hasn't spiked up despite all the crazy headlines, the trade talks deteriorating. It's a safer place to be relative to other parts of the world. So you want exposure to U.S. equities.